Thank you, Mr. Chairman. Ms. Thompson, I'm just kind of curious. Do you ever meet with the president at all, or talk with him about how his policies are affecting home ownership and the ability of your agency to function?
So I've met with the president to talk about home ownership, along with the secretary when we present a global perspective on home ownership.
Do you talk to him about what his policies are doing to home ownership, such as increasing rates, now his unwillingness to meet until about 2 weeks before the deadline with regards to the debt limit bill, how that all affects? You've already delineated what you think is going to happen here, higher interest rates could increase costs. Do you ever talk to him about that? Had your agency talked to his people, himself personally?
We have conversations with the White House. We have conversations with Treasury. We have conversations with other regulators.
Do they listen to you?
Of course, everyone is.
They may hear you, but they don't listen, do they? Because we continue to have this increased situation. I just read in the paper again yesterday where the Fed looks like they're going to raise rates at least once or twice more this year. That's going to have a dramatic effect on the housing ability, our people ability to afford houses, is it not?
Rising interest rates is a huge contributor.
One of the things that I used to chair the subcommittee on housing and insurance here, and one of the statistics that I got from the homeowner or the housing, how the home builders people was that for every 1% of cost, increased cost to purchase or to finance a home, 100,000 people no longer had ability to have a home. This is significant. That is really, really significant. That's devastating to the home builders associations, devastating to homeowners to not be able to buy homes because of increased costs. Inflated interest rates that continue to go up are devastating to homeowners, are they not?
High interest rates are very impactful to potential home buyers.
What's the reaction you get from the administration whenever you ask them about that or tell them about that? Do they care? To have 100,000 people every time you raise the interest rates like that and raise costs, 100,000 people no longer have access to homes.
No, understood. Housing is a big part of our economy, and I think everyone. It's a national.
So you're not
issue.
telling me that they react at all?
It's a national issue, and I think that people care about home ownership.
Yeah, but you're giving me the 30,000-foot view. I'm asking a very specific question: whether the administration actually responds to you and says we're concerned about that. Do they ever say that?
Well, I don't know that we've talked about.
So now you're saying you don't talk to them at all.
No. I didn't say we don't. What I said was that we do talk to the administration about housing generally. I think everyone is concerned about home ownership, including the administration, including people that I've talked to in this room.
Well, it doesn't seem as though you're meeting with them on a regular basis and getting your message across. How can you not? That's your job, to talk about housing. How can you not be forceful and say, I'm an advocate for housing. I'm an advocate for people to have home ownership. Your policies are killing us right now. Please listen to me. And I don't hear that from you. I'm sorry. Ms. Thompson, you had a career with the FDIC, is that right?
Yes.
About 20 years. You were in charge of the examination enforcement program for risk management, correct?
That is correct.
So FDIC enforces capital requirements on its bank, does it not?
They do.
So you've talked a little bit about this morning about the need to be about $300 billion of capital to be able to move out of conservatorship. And you're at what level right now, roughly, with the two GSEs combined?
About 100.
About 100.
Loss.
I know when I chaired the committee, it was about I think 20 or 25, which was about 6 years ago. So they're making progress toward that end. The problem is, as long as the GSEs are undercapitalized, it allows a whole lot of other things to go on. Would you, in your position as a risk management officer, allow the banks to engage in new activities if they were undercapitalized like this?
The banks would have to submit to their regulators.
You were the regulator, Ms. Thompson. So the question is, if you had banks that were severely undercapitalized, $100 billion versus $300, they're only a third of where they should be, and they wanted to expand their services into new areas they had no expertise in, would you go along with that?
I would have to look at the plan submission.
Ms. Thompson, you know as well as I do, I'm a former examiner. That wouldn't happen. They would not be able to expand because they don't have the expertise or the capital to absorb the losses that are going to come because they don't know what they're doing in this area.
they would likely be on a capital plan, and to the extent that an activity would help increase their capital, we would have
Gentleman's
to
time is
thoroughly look at it.
expired,
I yield
and
back.
thank the